or $30-40 million to recut the film. All right, let's talk about markets, since that's what everybody really comes here for. Looks like inflation is finally maybe getting a little pushback. Gas and oil is way down. Big win for Americans and obviously the administration. There clearly is an upper bound to how much people will pay for a gallon of gasoline. Consumption is actually going down, which is interesting. Humans pretty adaptable there. Jobs, and we've talked about this every month as we watch it, finally dipped under 11 million, as Sacks predicted. We're going to shed 300,000 or 400,000 jobs, it seems, every month, which should take this, 10, 11 million number over the next year down to maybe 5 or 6, which would still be an unbelievable number and still put us at very robust full employment, which has been a big question.
Also, there's a number of open job, the number of job recs. It went down by something like 500,000 in 1 month.
Yeah, and it's been going down 300 or 400. So it's kind of been pretty consistent, but there's clearly something going on here. And the stock market, interestingly, we've started to see a little bump here. Even crypto, which the most speculative of all assets, I guess, Bitcoin bounced as well, hitting 22, 23 now. So what do you think, Chamath, about markets? You may have called the bottom here on the program a couple of months ago, and I started J trading 3 weeks ago based on our discussions here, thinking we're bouncing along the bottom. Is it a head fake right now?
I think at the time, initially, I think I said, it rallies to around 4,000. I was a little off.
What rallies to 4,000?
The S&P.
Yeah.
Probably gets to 4,200, 4,300. Look, it's always important from my perspective.
Trading at 4,150 today, just so people know.
Yeah, it's always important from my perspective to just take the other side and just intellectually debate with oneself why the other side could be right. So at this point right now, what people would say is, okay, the Fed's going to capitulate at the beginning part of 2023. We have a pretty clear forecast for all the rate increases that have to happen. Everybody's doing the work that's necessary, either raising prices, cutting costs, or doing both, letting people go, et cetera, et cetera. So maybe we're there. Okay, so what's the other side of that? Well, I think, again, as I've stated before, the other side starts with energy. And the reason why I think it's important is that it really is the conflation of an economic system and a political system using an instrument. And if you look inside of what's happening in Europe, there's a lot of complexities here that I think need to get unpacked. So, for example, a couple days ago, the French government basically said that they're going to start producing less nuclear energy. And you'd say, well, why would they do that? Well, it turns out because, the temperatures are so high, you cannot use the water to cool these nuclear reactors because the exiting water is then so hot that would actually destroy the ecosystem of the lakes and rivers that they use to feed natural fresh water in to cool the nuclear reactor. Second, because it's so hot, all the rivers are below their natural level. Barges that carry coal and nat gas are getting stuck on the Danube. The Po, which is the longest river in Italy that feeds all the fields, actually is below the level where it can actually offload the water. So farmers can't basically do what they need to do to produce a food supply. So if you play all of that out, you start to see an issue where by, October, November of this year, we're back into the same complexity where energy is the tip of the spear around which everybody starts to debate all of the national security issues that we have to deal with, the Ukraine war, et cetera, et cetera. So I don't know. I mean, you've made a lot of money this year by basically doing the following, which is the exact opposite of everybody else. When everybody else was freaking out, had you bought, you would have made a ton of money. Now everybody's like, it's over. And you can tell that by looking at the VIX, which is the volatility index. We're about to get into the high teens. You have systematically, it has been true that when the VIX is in the teens, you tend to basically buy volatility, which is essentially you get short stocks. And when the VIX is in the 30s, you tend to basically sell volatility and you buy equities because we've hit the bottom. If you've been doing that for the last year, you've made a ton of money. So there you have it. I really don't know what's going to happen from here, but I tend to think things still have to get a lot worse to flush everything through the system.
And for people who don't know, the VIX is the ticker symbol that you can look up yourself for the CBOE's volatility index. Just measures the stock market's expectation of volatility based on the S&P index's options trading. If you look at oil, Sacks, we are now down to $87 for a barrel. Haven't been here since, looks like, February maybe. And gas prices plummeting. Something going well in this regard? What are your thoughts?
Yeah, I mean, it's that particular commodity is coming down. I still think we have a big inflation problem.
Why do you think it's going down?
I guess production's stepping up. I mean, in response to higher prices, people increase production, and the price comes down.
No. There's less demand. The crazy sad thing about this whole thing with Biden was that OPEC came back and they basically said we can increase supply 600,000 barrels a day, but the only two countries that are able to do it were, I think, Kuwait and Saudi. And the total number of barrels was about 100,000. So with all the bluster and all of this stuff,
you're right. Actually,
there's no supply.
It's because the interest rate increases are actually having an effect.
Correct.
These rate increases are like chemotherapy. It's on the economy.
The gas demand is lower than the summer of 2020 in the middle of the pandemic.
Yeah.
In the United States.
Yeah, you're right. So the commodity prices are reflecting expectations that the economy is slowing down and maybe in a recession.
So supply modestly up, demand massively down equals, hey, we want to get people to buy this commodity. It will lower the prices. Lo and behold, the same thing is happening a little bit with groceries, and we'll see what happens with travel. Homes also spectacularly falling down in price, and the inventory spiking as well. So what's your take here? Unpack the 75 basis point increase in the chemotherapy that you were going down that road.
Well, let me just speak to this rally in the market for a second, because I think there was a really interesting chart that Philippe Lafont showed at that COTU summit that we talked about on this pod a few months ago. And I'll just put it on the screen. I put it in the chat. What it basically shows is that during protracted bear markets, you can still get substantial bear market rallies. And so during the 2000-2001 dot-com crash, you had these plus 32%, plus 41%, plus 45% rallies. But even while the market as a whole was going down. And so they ended up being sort of sucker rallies. Now, I don't know if that is what's happening here, but it is a possibility.
One interpretation, Sacks, of this could be people are picking the winning stocks while the losers continue to lose, and that's what's causing this, jagged edge or the dead cat bouncing, as they say. Which is what we're seeing in a lot of these public companies, right? I don't know if you're watching, but Uber, obviously I'm still a big shareholder, had a massive print. And other companies have been doing equally as well, Apple included.
I think two things happened last week. One is there were a number of companies that reported good earnings, and I think even more importantly, had strong forecasts. So that helped. And I think it was just there was so much pessimism and negativity that just companies reporting decreases that weren't as bad as people were expecting created some room to move up. But the other thing that drove the rally is that the Fed made these comments on the heels of that 75 basis point rate increase that we were close to neutral. And so the market seemed to get really optimistic that we wouldn't get much more in the way of rate increases. Maybe there'd be a 50 basis point rate increase towards the end of the year, which would bring the Fed funds rate up to about the 2-year bond rate. So the idea was we're close to neutral, and markets really reacted to that. The thing about that is, though, that I think what Powell and what the Fed says today about rates is way less important than what the inflation data will actually show in a few months. If we still have 9% inflation 3 months from now, then I don't think the rate increases are done. So at the end of the day, I think that the data here is going to be a lot more important than what the Fed says, because certainly the Fed has said a lot of things over the past couple of years that turned out not to be true.
You would agree they seem to be doing something correct here with the 75 bips, and taking it a little more seriously. It's having an impact.
I'll say it again. I've said it now 5 pods in a row. We've never seen a moment in history, in American history, where when CPI has printed successively above 5%, that it got under 5% without Fed funds getting to that same number. So we should all hope that this is the exception that proves the rule, but there's an enormous amount of data that would tell you that we have to take rates to double what the equilibrium rate is thought to be right now.
There was no print in August. They take the month of August off. They could do an emergency print, and then they're expecting 50 or 75 bips in September. If they do that, Sacks, Chamath, Friedberg.
I think 50 is the expectation for September. But look, I think it's appropriate now, after all the rate increase they've done, to take a pause. They're going to get 2 full months now of inflation data before the September Fed meeting. I think it's appropriate to let the economy digest these rate increases and see where we're at. And let's see where the next 2 months inflation print is, and then that'll determine what happens next.
Friedberg, based on all this, what's your outlook for the economy?
I think there's more. We all try and be predictive based on the current set of conditions in the world. And there are a number of conditions in the world that the switch could flip very quickly. And there's enough of those triggering events right now that the probability of any one or any set of them happening in the next couple of months is probably pretty high. I kind of talked about it on the show a few weeks ago that it's like a bunch of tortoises sticking their head out of the shell. And, there's a few that might pop out here. There's obviously a massive problem with getting gas to Western Europe for this winter. There's an emerging problem with food insecurity in Africa, South Asia, around the world. There is obviously continuing escalating conflict in Eastern Europe. This NATO situation may or may not help. The Taiwan visit may or may not help.
Is it escalating? Yeah.
I think Sweden and whatnot joining NATO is
okay. Sure.
Is going to be viewed as provocatory, and it could not make things cooler and calmer over there, but make them more tense. I mean, we view it as a security issue, but it really is a conflict escalation issue. And then I think that there are emerging markets problems. Argentina is facing 60% inflation. Brazil has a criminal as their president right now, and he has said publicly in the last couple of days that he will not leave office if he loses the election because the election is fraudulent. And if that happens, then you could see massive civil unrest. He's been encouraging the population in Brazil to go to the streets and fight back. And there are a number of these flashpoints. And by the way, that's a massive food supplier, as well as a massive holding in EM credit portfolios around the world. U.S. consumer credit is a problem. We just had the largest number of new credit card accounts opened since 2008 in Q2 from the New York Fed report yesterday. All of these things I'm painting as pictures of potential flashpoints for what could quickly become wildfires or brush fires that spread very quickly in markets and could escalate some of the considerations. So I don't feel like I look around and say, everything is good, we're in a good place. There are some indications that some of these stagflationary considerations and concerns we may have had in the way that markets are behaving right now gives us a pause, gives us a respite, makes us feel okay. But there are also a lot of things that could go wrong. And any one of those things could be a triggering point. So I always think in terms of probabilities. There's a whole bunch of low probability things, but when you have enough low probability things, the probability that something in the set is triggered becomes high. That's where I kind of say, look, the probability of something being a flashpoint for us this year is high. I also still think that globally, we are very primed for conflict right now. And we feel like, and are hoping that the Russia-Ukraine thing resolves, but there are other points of escalation. Look at what's happening with Pelosi visiting Taiwan. Everyone that's, even well-informed is scratching their head saying, what the heck is going on here? There is currently an indulgence in conflict. And I think that indulgence will, cause more harm than good, particularly for these financial markets that we're commenting on right now in the months ahead. So, look, like I've always said, I'm not going to be one to time markets. It's like trying to time social behavior. Like, who's going to say some word first? I don't know the answer. In a population of people, you can kind of guess how people are going to behave, but markets are the output, the manifestation of social behavior. And so timing markets is very difficult. I think you can do a good job analyzing businesses and the quality of businesses and how they will perform over time. I don't think that anyone over time can do a good job timing markets. And I think that there's a lot of these things that could really shift anyone's perspective on what you believe right now very rapidly in another direction based on any one of these things happening.
Chamath, do you feel the world is, as Dr. Doom here is, setting it up?
By the way, I'm not being negative. I'm just pointing out that there are a set of things that could flip things the other way, right?
Absolutely. I'm being slightly facetious here, but you paint a pretty stark picture of, hey, there's all these tipping points around the world. Chamath, do you feel like this is how the world works? There's always a bunch of potential tipping points. There's always going to be wars, sadly, and there's always going to be countries that are dealing with dictators or insolvency, especially in frontier markets and emerging markets. Or is this chaos, really acute and people should be, anxious and in a panic?
I think both of you guys are right. Like, there's always stuff going on in markets, and markets represent the collective sum of our wishes and expectations and also the realities. This is why I think, for me at least, the way that I process this information is not trying to have an opinion on any one of those things, because I find it too hard. And I don't have enough depth of understanding of any of those things. For me, I'd rather go back to the historical trends, because those I find a little bit easier to parse. And whether any of those things are true and baked
Chamath,
into inflation right now or not.
Can they turn that radio down?
Jason, we're just talking something.
Oh, okay, no problem. It's just we can't hear you, so I want to. No problem.
The second helicopter is replacing the first helicopter because of a fuel leak issue on the
helicopter
first
pilots
helicopter.
are swapping out. Yeah, no, that's important.
The helicopters are switching on the helipad. So,
I mean, it takes a team to park this boat. I'll just be honest with you. So they're trying to get it done as quickly. No, but listen. So the real problem is that, like, if I go back to the historical artifacts, have there been issues in the past the way that Friedberg described? Absolutely. So this is why I think you can look at the fact that whenever there's inflation and whenever it's spiked, what has had to happen by the Fed is you have to take rates above that key 5% threshold when CPI is above 5% to break enough demand so that the economy's reset. And I think that's where we are. So instead of trying to figure out whether, the Brazil thing as an example that Friedberg said is crazy. Like, he's basically, he said publicly in a press release, the army's on my side and it's ready to help me, keep and stay in. Like, just the craziest thing. So what are you supposed to do?
The fighters need to take to the streets. It's like
so what are you supposed to do? In my opinion, I'm like, you know what? A version of Brazil has happened before. I don't know enough history, quite honestly, to know the specifics of what happened then and how that could translate to now. And I don't want to spend the time understanding what's going to happen in Brazil right now. I'd rather just say there are 20 or 30 things that could very much complicate the world economy. I think the reality is that governments need to flush all this excess money out of the system so that we can really find out what equilibrium demand is and get back